Good evening to everyone present here today. We have our CEO and founder Dr. Mohit Batra and our CIO Mr. Sunil Damania with us today. The discussion would revolve around the 5 key trends. Towards the end, we would also be having a Q&A session. Over to you, Sunil sir.
Thanks a lot, Mahtab, and very warm welcome all of you. So today I'm going to discuss very 5 key trends that everyone is talking about. One, why the gold prices are moving up if you and me are not buying so much gold. What's the reason why we have seen gold going up? Number 2, someone suggested about the FIIs are buying so much. Where are they putting the money? Which sector they are putting more money into? Okay, and what the impact because of that on the underlying companies there. Number 3, I'm going to discuss about what's happening, and we all know that China is struggling with the new COVID surge. So what's happening to the metal prices? Is the metal prices what is the trend there? So that's a trend that we are going to discuss about ferrous as well as non-ferrous metal. Number 4, someone had asked us about last webinar that what has been the trend in the volume of the cash segment in NSE as well as the FNO, and I'm going to discuss about that also. And the 5th trend that we are going to talk about is that what happened to the Adani Group shares, because Adani Group shares seems to have gone too much. If that is so, is the worst over? And I'm going to say some data to you, trend in that, to help you understand that, because I keep getting one question every now and then in the webinar: should you buy Adani shares? In fact, when I was with BTTV this week, and again the same question was asked by the anchor also. So I'm going to cover all these things in my presentation. Before I begin that, a small disclaimer that this webinar is only for an education purpose, just to enhance your understanding about the equity market, about the sector and the company. Please consult your financial advisor before buying or selling any stock. Please remember, when you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future returns. With this, let me start with these are the 5, though I'm not going to repeat again. Let me start with why the gold prices are going up. There are 2 key reasons. One is that this is the price movement of gold. I think the central banks across the world seems to be getting more and more into the gold prices. And that's one of the reasons why we have seen this gold prices are moving up. It's moved up by near about 15.3%. And reason why? Because the central banks are buying gold reserve. And another reason is also the de-dollarization, where central banks are less comfortable buying dollar. So instead of buying dollar, they are buying gold. And due to that, if you look at some other country like Singapore, so last calendar year, that is 2022, the central banks across the world bought 1,136 tons of gold, which is a record. But they did not stop in 2023. They continued buying in the Jan and Feb. That's the data available. And net is 125 tons. So net, someone would have sold also, someone would have bought also. And who bought it more? Singapore 51.4 tons, Turkey 45.5, China 39.8. Normally the Chinese is the biggest consumer of gold at the retail level, followed by, and then the China, then the India. But the Chinese also are buying more and more gold as a reserves, because somewhere that friction between US and China is playing a role. So reason why, so now if you really want to understand where the gold price will go up, don't look at what is happening at the jewelry store. The new trend is that you need to look at what central banks are buying in their reserve, whether they are buying dollar or they are buying the gold. And that's going to decide where the gold price will move up. And if you look at India bought near about 2.8 tons, not so much in this. A lot of Indians have started selling their gold at the higher prices. So if you look at the recycle gold that's happening in the country, it's happening at a higher level. So people are selling gold because they think this price is very, very high. But on the other hand, the central banks are buying. And if so, for some reason, if there is no consensus on the debt ceiling limit, I think we would see more people, more central banks across the world buying gold moving forward. So that's a one trend. Second trend is that FI has been buying very heavily. We saw that happening in the month of April. We saw that in the month of May as we speak. they are buying very, very heavily. So we just said, okay, total 46,000 crore has been bought from 1st March 2023 till 15th May 2020. This data we have taken from NSDL. And the data is not available up to date because NSDL compile on a fortnight to fortnight basis. Now, this 46,000 crore kind of money that's coming in, where is it going? Because that's the most question. कि FI purchase करा तो कहाँ पे कर रहा है? And the no-brainer, despite what is happening globally in the US, the crisis that happened because of SVB, in India, they bought very heavily into the financial sector. 15,516 crore they pumped in only in financial sector out of that 45,000 crore that they pumped in. Followed by auto companies. And automobile companies are getting huge inflow. We know some of the auto companies have touched all-time high or the 52-week high purely because of heavy demand from the FIIs. Who is selling? Mutual fund is selling. Let me tell you very frankly. Services is basically another 8,000 crore, capital goods and so and so. But it's not that they are only buying. They are also selling in some of the sectors. And it's no brainer that they sold maximum in IT sector. They sold near about 12,000 crore in the information IT software sector since 1st March till 15th May. Purely because of what is happening in the globally, that BFSI segment coming under pressure, some demand could remain tepid and that could impact future performance of the IT sector. Oil and gas consumable fuels is also, this also heavy selling. So it's not that FI is only buying across all this. They are also little selective in terms of buying the sector. Media and entertainment 872 crore and textile, very obvious, they sold 358 crore. So FIIs today love is basically financials. I'm not saying that's going to happen going forward tomorrow also, but where they bought money, they bought in more into banking and finance, followed by auto and auto ancillary, and they've been sellers in information technology. So despite 45,000 crore, 12,000 crore, despite sale of 12,000 crore in IT, they bought overall 45,000 crore net positive in India. Adani stocks, and you people keep asking me because everyone think Adani के share price बहुत बढ़ गए. I'll show you something. You'll be surprised to know that Adani Group total market cap continues to remain 45% below what it was there on 1st January 2023. And each and every company, even as we speak, despite a smart rally that we have seen in Adani Group shares in last couple of weeks, they continue to remain. Adani total gas down by 80%. Once upon a time, it was the most valuable company in Adani Group. Down by 79% despite the rally. Adani Transmission 67, Adani Green for 50%, so and so. So a group which was having 19 lakh crore in beginning of 2023, today as I speak to you is at 10.26 lakh crore. Down by 45%. Market has not gone down at 25%. The reason I wanted to put this trend because a lot of you people are getting little excited about Adani. I thought let me put this slide to help you understand where you should be, if at all, taking a participation in Adani Group shares or not. Coming to the metals, and this slide I've just put it just to help you understand what's happening in the global economy, because metal is a good reflection of what's happening in the state of the global economy. Why? It's a basic material. And if that basic material finds a lot of challenges, you could understand what can happen to the global. I must tell you, IMF, World Bank, everyone is talking about the not so great scenario for the world economy. Germany slipped into recession yesterday. As you all know, the 2 quarters, October to December and January to March quarter, the 2 quarters in a row, they have reported negative GDP growth. While US, the first GDP growth has been revised little upward, but the scenario looks on China, which had promised, which has given some amount of a hope post lifting of COVID, continues to struggle. And as you all know, China is facing a next wave of COVID. And right now, the general belief with the investor is that China will not announce a new lockdown, but they will try to handle this crisis through the vaccine. We need to wait and watch. Now, metal basically gives us what is happening in the metal prices. Metal prices are little So steel prices are normalizing, at least in India, but globally that's a little pressure there in this one. But another good advantage with the steel companies is that the raw material prices are also declining. So net for the Indian steel companies looks to be a little promising, but not so for the global economy. So that's one. That's on the ferrous metal. Non-ferrous metal, the scenario is very, very bad, and that clearly shows the sentiments on the global growth. Remember, non-ferrous metal is a true indicator. So even if I have a very simple formula in life, so whenever you see metal prices, non-ferrous metal prices are going down, it gives you what is the future projection of the global economic growth. And this data gives you very, very clearly zinc prices have down by 43%. The reason I'm sharing this data because there are certain underlying companies in India, you know what you need to do about that. And if you happen to listen to the players also from this sector, no one is talking about very good scenario, at least for next 2 quarters. They are not saying for the full FY 2024, but at least for first half of 2024, FY 2024, they are not so very clear-cut, rosy. And in fact, the complete inventory level seems to be building up globally on this one. So this is what the zinc, this is what the copper, and copper price may further go down. I must tell you that. Why? Because of China factor. So what has happened is this, because of this, is purely because of China. So when you see this price moving up from year to year, purely because of China. Copper and China are hand in hand. So if you really wish to know what is going to happen to the copper prices, please look at GDP growth of China, and that will give an idea what needed to be doing with that. And this price have come down because people started realizing now that China, which was hoping to post lockdown, lifting of lockdown, they will start doing well. In that hope, it's moved up, but now it's coming down. So doesn't looks very, very exciting. And something similar happens with the aluminum. We all know what happened with the Hindalco prices, and if you happen to listen to the Mr. Menon of the CMD of the company, he did mention that scenario doesn't look very rosy, at least for the next 2 quarters for the Hindalco as well as for the Novelis, which is his US subsidiary. They also, they don't expect the first half of FY 2024 very, very exciting, and they did talk about that restocking is still yet to happen. So they do expect Novelis per ton margin will remain under pressure. So not so rosy picture. The reason I'm giving you because this does give you a trend of what is stored in going forward. The futures and option that's based on listed last time public demand. Very quickly I'll talk about the FNA volume. You look at what has happened. This is despite the fact that SEBI came out with the data that 90% of the investors in FNO lose money. And yet somehow it has become an addiction in this country. I must tell you that. And you can look at the growth. The December 2022, it was 479 trillion for that quarter, which increased to 646 trillion. कोई फर्क ही नहीं पता हिंदुस्तान में पब्लिक को. I don't understand why this is, and Mohit, even maybe when we discuss that, I think we should understand why is that people are so much obsessed or so much. This, I think, has become an addiction kind of a. And for the April, 242 trillion. If I have to multiply this by 3, it can go up above 700 trillion. Am I right? And that's the kind of stuff we are talking about. What it was there in first quarter of 2022, 285, completely, I don't understand why, if people are losing money, why they want to do that. I think it's become an addiction. And this is a trend which is very, very scary, if you ask me very frankly. And unfortunately, cash volume has fallen. You see this, it has not. So both are showing a very divergent view. What is happening on FNA, FNO, which is constantly on the increase. Okay, it's up, up, up. Not so case with the cash volume. Am I right? Now, what is the positive trend? Positive trend is that yesterday, International Energy Association came out with the data. The first time in the history of the world, we would be spending more, the whole world will be spending more on the solar energy as compared to crude oil production. 382 billion US dollar the world is going to spend on solar, while the oil would be 371 billion only, oil production ke upar. And you go back 1 decade back, it was 636 billion was spent on oil production and only 127 billion. So 127 as you going to 382, While the crude oil, it came down from 636 to 371 billion. I think the global warming is, and I think solar energy is going to form a very significant portion. And crude oil, if you remember, I did one presentation about the crude oil and how India's GDP versus crude is coming down. I think the whole world is want to de-risk from the crude oil, and EV, whether we like it or not, is going to be the future of the, that's a positive. The negative trend, and I was going to some of the con call of Walmart, Target and so on and so forth, everyone talks about discretionary spending is coming down. When I say discretionary, does not mean that necessity, like your FMCG staples and though, that's a non-discretionary. You need to consume bread, you need to consume milk, you need to consume atta, you need to consume your sabun and everything. I'm talking discretionary. The reason I'm saying this, sharing this with you, what is this happening in US. If you happen to listen to the Page Industry which came out with the numbers yesterday, not so great. I was listening to the Bajaj Electrical MD, Mr. Poddar, not only is con call, but he was also on the CIA, which Sajin Ban was hosting, and that's why he also mentioned the demand seems to have come down. If you look at Orient Electric and if you look at the fan business, they've come down drastically. So discretionary spending, there is a negative trend. So if you are happen to take exposure in discretionary, that those who are into discretionary spend business, please stay away from this company, because that's what has happened in the US will happen in India. It's happening in India also. The only exception being the luxury goods. I think luxury goods seems to be have been bucking this trend, and they basically people are spending more and more on the luxury, which is also discretionary, but the normal discretionary spending seems to have come down. I think the 2000 rupee note ban that has come could give some fillip. Why? Because people will start buying what they would not have bought otherwise because of 2000 rupees note. So that's a major news, 2000 rupee note, which we discussed last Friday, but that is there. Auto sector, FI, the weightage of FIs have been buying very, and I think it has touched record high of 6.1%. Food grade production has been very high despite so much concerns on the heat wave and so on and so forth. India economy grew, that's the data coming in today, 5.1% in Q4 of FY 2023 as compared to 4.4% on FY 2000. In fact, I was talking to one economist today and I've been informed that Indian economy could grow less than 6%. I don't believe that, but that's what, sorry, he did not say 6%, below 6%. He said it will grow at 5 to 5.5%. I don't believe that kind of a number. Yes, possibility is there below 6%, but I don't think it will be 5 to 5.5% kind of stuff. We need to wait and watch. Other major news, FI have invested near about 34,805 crore in May 2022 month to date, 5,000 crore this week, and YTD we are at 20,220. We continue to maintain, we said in the 1st January 2023, 1 lakh crore net inflow of FII, and that time a lot of you people are a little concerned. Why? Because in month of Jan itself, they sold near about 22,000 crore, and at that time also we maintained FII will pump in near about 1 lakh crore. So till first 5 months, they invested 20,000, 2,026 crore. Next 7 months, they would spend near about, they would invest near about 80,000 additional in Indian equity market. Nifty and Sensex both close in green for this week. And domestic demand for the Indian steel in India is likely to remain little robust. And if that is so, so the players who are focused on domestic, the steel players in focus on domestic market, they will tend to get benefit. With this, let's open the floor for question answer. But before that, Mohit, would you like to comment on this trend that is happening in FNO? How does one explain that, the Zerodha Kamath coming out and making a statement that people don't make money even more than the bank FD, SEBI coming out with a report. Why is that people are still not able to understand this, that you are going to lose money, but yet we see more and more people participating in this?
See, I think for 3 very specific reasons, Sunil. One is the short-term greed for investors is always bigger than the long-term, profits. That has been the trend. So I'm not talking about sheer numbers and the growth out here. I'm talking about FNO share versus cash market shares has always been disproportionately in favor of the FNO share. We've always been looking at 85, 80, 85, 90% of the volumes coming from the FNO over the overall volume. So that's number one. Number two is when the cash markets are not doing well, people tend to move towards, instead of detaching themselves from the equity market, they have a tendency of moving towards the FNO market. And I think the third most important factor out here is the new acquisition of the broking accounts that is happening is at a very younger age. So when you see the average age at which now the discount brokers are acquiring customers, that's typically anywhere from 25 to 35 kind of age group. This age group is where there is a lack of serious conviction of long term on the equity markets, and they contribute a lot on volumes, because if you see sheerly the growth in the last 2-3 years of the new demat accounts that have opened up, new broking accounts that have opened up, that's humongous. And these are essentially the lower age group investors who've come into the market for the first time. Coming into the market for the first time, you always tend to not understand the market, that market can bite you in the shorter run very easily. And I think predominantly this is a result, this growth is a result of immaturity in the investors coming in at that stage. And as I said, there are three factors, but I personally feel that the regulators are very, very strongly watching this number. I know that, through informal guidances that I keep getting in from meeting various players in the market, that there will be very, very strong restrictions on the exposure limits, on margins that will keep coming in to deter losses for investors by taking undue, exposures in the FNO market. And I think, maybe the fourth factor is also because the whole market is moving towards a transaction-based fee structure. See, brokers are moving towards a transaction-based fee structures. There was a time where brokerage was 20 paisa or 30 paisa of the trade that you were doing. So if I am doing a 1 lakh rupees cash market trade, or a 5 lakh rupees cash market, or a 10 lakh rupees cash market trade, I would pay at 10 paisa, 20 paisa, 30 paisa. Now with the discount brokers and close to 50% of the shares sitting in between the top 3 or 4 discount brokers like Zerodha and Upstocks and Angel, and they have moved on to a 10 rupee, 20 rupee model. So their objective is to make sure that you churn. And I think that's where a lot of churn is coming into the market. So there are very clear indicators that this is happening. In fact, in one of the webinars, I had basically said that the active accounts on the equity markets would sharply decline, because this whole froth that has come in, I would call this as the froth, the first time investors who are coming in and trying to trade straight away in the FNO market without understanding the nuances of the market, will burn their hands and move out and sit. Okay. And you will have the mature investors who are patiently waiting, to keep investing. So there are very, very strong and simple factors out there. Maturity of the market always comes in, but unluckily for us, it comes in when after we get 2-3 slaps on our face, and after we lose some money, then only we become mature. Because I think just in life, like failures teach you more than successes, losses teach you more than gains in the equity market, and I think that trend will follow. I think the active account, if you were to see even after new acquisition with this kind of a trend, will come down over a period of next 2-3 years. The serious investors will remain as the serious investors, and I think common investors will remain out there. But majority of the froth will get cleaned out.
Yeah, over to you.
So this first question for today is from Mr. Bhavik. Good evening, Sunil sir. Will mid-cap and small-cap share continue to outperform as compared to the large-cap in this financial year? Can we put more money in mid-cap and small-cap at this stage?
So 2022, it was not a year for mid and small cap, and when we made a presentation in January 2020, we said that 2023 would be a year for mid and small cap, and we continue to believe that. There are a couple of reasons for that. Number one, the valuations of mid and small cap corrected so much that there was a valuation gap was there. There is a scope for appreciation, number one. Number two, what we have believed that whenever there is a rate of interest moves up, the equity market, the risk of strategy takes place. And when the risk of strategy takes place, mid and small cap don't do well. There is a now belief that rate of interest will start coming down. And when that happens, the risk-on strategy comes back. And when the risk-on strategy comes back, medium small cap will do well. So now that's number two. And number three, if you remember, I did one slide which says that what is the percentage share the medium small cap accounts for the total market cap. And that number was substantially declined. So the law of average has to come in, kick in there. And that's the three reasons we believe that medium small cap should do extremely well in 2023. So what we stated in January 2020, we continue to believe that will do well. If you remember, we were having, Mohit and I were joking other day about which portfolio should do well, whether it should be power or the soul, and we had a difference of opinion there. And the reason was very simple, a view on what will happen to the mid and small cap and what will not happen to the mid and small. Because I think year 2023, we again repeat, is a year for mid and small cap. So your answer to you, Mr. Bhavik, please increase your allocation to mid and small cap.
In fact, interestingly, you said that, Sunil, I was having a review today with one of our customers on the Infinity side. And if you know, over the last 1 year, I have been more an advocate of investing in power, and you've been, the advocate of investing in soul. But looking at what's happening and, interest rates being bottoming out, for the first time, I today said that don't put, if you want to put more AI, I would prefer a soul. If you have both the portfolios, I would prefer a soul to a power. So I have kind of changed my story to what you're saying very recently.
We have a bet of 500 rupees or 100 rupees, I forget.
1 lakh rupees.
Over to you.
So this next question is from Mr. Frank. UAE gold buying from Russia has gone up by 1200%. What do you think they are doing with this gold?
I don't know, Mr. Frank, I have no idea what they are doing with the gold. But the fact that I mentioned about is that the central banks across the world are buying more and more gold at the cost of dollar. And that's one reason we have seen the price surging in the gold. But I don't have any idea what they are doing. Sir, you need to ask the UAE governor only what they are doing with the gold.
Frank, it is a very simple thing. Currency is a commodity, gold is a commodity. Both are global commodities. So when the fluctuation in the currency increases, typically other commodities come into vogue, which are more globally tradable commodities and which can be stored as reserves. And hence, wherever you will say fluctuation on and uncertainty on global currencies coming in, gold will typically pick up, because that's a kind of a natural hedge to try and say how you can play the global allocations and how you can play the global uncertainties. So it's a very clear sign, as Sunil was pointing out, the massive buying of gold that has been happening by the governments. It is primarily a hedge against the currency. And that is always the case. You will have a cross hedge, asset always in vogue, whether it is currency. If you see, dollar stabilizing, you will have a dollar accumulation happening. If you see dollar unstabilizing, various other countries, currencies volatile, then you will typically look at gold as a natural currency, which is also a global currency, which can be converted into your local currency as well as into any other currency out there. So it is, I think it's a cross commodity fluctuation period. And what clearly tells us of the massive buying on gold that is happening is that the currencies are unstable right now. And that is the reason that, governments are accumulating gold reserves.
So this next question is from Mr. Rahul Kumar. Higher zinc and copper prices means higher GDP and vice versa, or are they inversely proportional?
No, that's exactly, Rahul Kumarji, that's exactly what I said. When the prices of non-ferrous metal comes down, that doesn't give a very happy scenario on the economy front. That's a global economy front. Of course, it would vary from a company to country, but it's completely, so if the price goes down, GDP will go down. It's a perfect correlation in that sense.
So this next question is from Mr. Sagar. My question is your view on Apar Industry. It is a strong buy, but it has very good numbers. But management commentary mentioned that this was one of the top quarter and this performance may not repeat. But growth will be there, but not as last quarter. So how to play when margins are topped up in any script, but still growth are there?
So Sagarji, I think this is not only what Apar has been saying. I think many other if you happen to listen to the con call of many other companies also, they are saying very similar kind of a stuff. purely because of what is happening in the globally. The demand seems to be, the growth seems to be a challenge. So number one, number two, higher base effect, and people don't have much of a visibility beyond 1 or 2 quarters, so they don't know what will happen there. Even if you look at the banking, most of the banks have gone on the record saying that they don't expect the NIM margins to be at the peak, and they don't believe that this NIM will get sustained going forward. Something happened with the loan growth book also. They are not many are very optimistic about the loan growth book also. Now, Apar, yes, it's a strong buy. You can go ahead and buy that. Please remember, you need to remain nimble-footed in that, because the probability is very high that our next, as and when the next CFT score comes in, the CFT score may not be positive at that point of time, and due to that, the score can go below 70. So what is buy today may be a hold going forward. So, but right now score is buy. So if you wish, you can go ahead and buy. We don't have a part in our portfolio as we speak.
So this next question is from Mr. Prasad. How many companies have left India and why? Is India overhyped as a business destination? What is your opinion on this?
Prasad ji, I don't know how many companies left India. I said, please help me understand which prominent companies left India. On the contrary, you keep saying that more and more companies are coming to India to do China plus one strategy. I have been informed Tesla is going to now set up a factory in India. So, sir, please help me understand why, which company you are talking about which is leaving India. Is it India is overhyped? Certainly not. You listen to the global leaders, and I think everyone wants to de-risk their business model from China plus one. They don't want to de-risk from China, and that's why they are looking at China plus one. In fact, people are talking about China plus one, but eventually people will say there is nothing called China plus one. It's everything minus China. I think that's going to happen very soon, because the local government has been acting very funnily manner. If you look at, they are not selling any data. They are putting some corporates behind the bars of a global this one. So situation is very, very, and people are not getting enough confidence to continue doing business in China. So I think my sense is that, in fact, I was just discussing over lunch with Mohit. Warren Buffett invested in TSMC, that is Taiwanese semiconductor company. And he said, my view on the complete chip business is very, very strong. The reason I'm getting out of that TSMC, because it's the location, and that is at Taiwan. And they don't know what could happen to the Taiwan, this one. So even people will come out of the Taiwan and look for a location like country like India where they can set up the plant. So I think what is happening geopolitically, India would be one of the biggest beneficiaries. So Prasad ji, please help me understand which companies you are saying are leaving. It will be really knowledge to us. Mohit, can you recollect any company which has left India?
No, I don't think so on the listed market space, but maybe what Mr. Prasad is pointing out is the smaller companies, maybe on the unlisted side. There has been a trend of the new generation technology companies.
I think, is the company moving out, or is the promoters leaving, going out?
No, some part of the businesses I've also heard have started going out, and that is not on the listed space per se.
Achha, okay.
That is predominantly on the unlisted space, where maybe people are facing problems, or maybe they're going to free zones, or maybe they're going to larger economies where their service has a better pricing built in. And those kind of businesses which are not essentially product and manufacturing driven, but more on the servicing side, the services business on technology.
So this next question is from Mr. Neeraj. Good evening. I understood your views on the options trade. What is your advice on algorithm trade? I've been making little money using the margins of my investments in good script. Please comment.
See, most of the options trade, Neeraj ji, is they work out of algorithm trades only. And I think the most common and the most oldest algorithm business has been on the FNO side, because you have the price and volume, you can you can draw charts easily, and you can give recommendations out there. So when I'm saying that we are not in favor of the whole FNO piece, that includes the algorithm piece, because most of these FNO strategies or some of these FNO strategies will run on algorithm. So we personally believe that there is a limit to algorithms in terms of what it can achieve, and most of the time the algorithms need a much larger set of market on a much larger span of time, and hence globally, if you see, algorithms are more and more used on the fundamental side, because it is easy for an algorithm to plot multiple scenarios when you have larger data set and across, say, 5-year, 10-year period. So trend analysis becomes a little more easier. Your testing of the algorithm becomes more easier. In FNO, the strategies are short-lived. They are very short duration strategies, and there are chances of it going right and wrong. And what comes at the risk of the whole FNO is the whole piece of leverage that people may take to because you're playing with such thin margins that you have to take leverage out there. And I think what kills is not the FNO product per se. What kills is not the derivative product. What kills is the excessive greed of leveraging that goes in that whole product. So I think if your leveraging is minimalistic or not there, and if you're then playing, then it's some days you win, some days you lose, but overall it will be a loss game, is what my estimation is. And if you're making money initially, that should be fine, but I think you should be careful, sir.
So this next question is from Mr. Putamkar. Sugar and paper industries business is cyclic in nature. Can you please tell in which phase both the industries are in currently, upswinging or flat?
The sugar definitely looks to be in an upswing globally, because of more and more players are looking at ethanol blending as a one way of looking at it, and I think the climate changes could also impact the production of sugarcane, and if that happens, the sugar price normally tend to go up. So there are two levers there. Paper is yes, definitely right now it looks like a little flat rather than uptrend. And if you happen to listen to the commentary which has come from some of the paper companies, prices have come down of a paper. So that looks more like a flat as we speak. But sugar looks to be more on an upside.
This next question is from Captain Frank. Hello Mohit and Sunil, Captain Frank from Canada. There is more comforting news. The India Meteorological Department said today that the El Nino effect is unlikely to come in the way of India enjoying a normal monsoon year in 2023-24. The Bureau issued its long-range forecast. Rainfall is expected at 96% of its long-term average with an error estimate of 4% on either side. Do you think this can act as catalyst to the market rally?
So, sir, if my memory serves me right, IMD, when they made the first prediction, it was 96% LPA only. And I think I'm not read this, the latest news which we are talking about, but it's if it is so, 96 only. So there is no change in that. The worry is about the spread of the monsoon, number one. Number two, that market will very closely watch it. And number one. Number two, if at all El Nino comes in, when does it start? Does it start in the beginning of the season, or does it start at the end of the season? And along with that, and in fact, we did one webinar on the monsoon, and yesterday I was reading one opinion piece published in the Mint, exactly saying what we stated 1.5 month back in a webinar about that IOD, I'm forgetting the Indian Ocean Dio something, forgetting this one. So if that is positive, then it will benefit. So right now, there is no clarity, I must tell you that. And the plus and minus 4 is a too big number, because minus 4 means 92, and 92 is a below average monsoon. Am I right? Because that's the margin you talked about. We need to wait and watch. Right now, there is a high probability, I'm again using the word high probability, that India will see a El Nino impact. And that's what NOAA, which is a North American agency on the weather, has been saying that the impact, and there is a fear that El Nino impact could start coming as early as end of June or so. Anyway, monsoon has been delayed by 4-5 days. It will hit the Kerala only in the first week of June. And then in a city like Bombay, normally get maybe 7 to 10 days after it hit the Kerala coast. So I think we need to wait and watch. But right now, I don't think market will take very positive at this point. Pure based on this news, market would wait and watch in terms of how the spread and what is what happens actually in the actual life about the monsoon.
So this next question is from Mr. Jayant. What is your view on the electronics manufacturing sector and companies like Dixon, Optimus and D-Link? They seem to have corrected quite a bit, and would it be good to look at these?
So I'm just expressing my view. Mohit may have a different view altogether on that. So, you need to look at all the companies from the valuations point of view. If you remember, Dixon has been one of our best wealth creating company. We bought at a very low level and we exited also, and we advise investors to exit. See, Dixon management also carried very positive, about the mobile phones and so on and so forth. So the demand is, of course, and then when the question was asked to them, are they looking at also iPhone? And they said they are not in discussion mode for iPhone and so on and so forth. So the industry should do extremely well. In fact, I believe, and in fact, India's exports of electronic goods and the components in next 10 years would be 10x from what it is today. Why? Because a lot of people are coming to India to set up factory, and India could become one of the global sourcing hub for the electronic. And that's what if you read the government, the blueprint or the road path or the goal that they have been very, very extremely focused on that segment. So that's going to happen. Will it accrue to players that you mentioned about? We need to wait and watch. And I think some of the companies that you mentioned are commanding a very rich valuation, and from that level, there is no margin of error kind of stuff. So if for some reason they are not able to execute their plan, market would not be in a very kind mode. They will basically punish those companies very severely. So my suggestion would be, please use score which is available on our website and take a call accordingly. But yes, our view on the sector is extremely, my personal view that this segment will do extremely well. I wouldn't be surprised 10x growth in next 10 years. Mohit, do you have any view on this?
No, I think I agree with you. I think it's one of the sectors that if I was to look at in the longer run, maybe 3 or 4 sectors that will exceptionally do well, electronics is right up there. It is one sector which will benefit a lot in the next 5 to 10 years. Whether it becomes 10x or 8x, that number I frankly don't know. But I think in terms of sheer growth of the output, it will be humongous from where it is today. And as Sunil rightly pointed out, I think a lot of that news is already built into some companies' valuations, and that is something that we're seeing. The valuations are very expensive. I would really wait for it to cool down a little, go through one cycle before it starts coming back into the buying zone. But currently they are a little on the expensive side.
So this next question is from Ms. Neena Gandhi. Dear sirs, it seems market is an uptrend move at present. So does present rally will continue, or we see any trigger in near future for correction? Accordingly, can we plan for profit booking? Also, when PMS launch is likely to happen?
So let Mohit answer the second part, then I'll answer the first part.
PMS launch is, we are going to do our launch, I think, around about 5th or 6th of June. And we will start, locking in applications from, say, 10th or 12th of June. But 5th June happens to be our 8th anniversary. And we are very excited to launch PMS on the 5th of June. That is the reason I'm saying that mostly we'll launch it on 5th of June. And we should be in readiness in a week's time to start onboarding clients on the PMS side. So that is that. Now that I've started speaking, I may take a shot at the first question and then you can add on to that. I think For me, the first trend of a market turnaround will happen with the first cut from Fed on interest rates. I will wait and watch when that happens, because that, if you ask me, 1% here, 2% here, all of that is just a volatile market. And you know, me and Sunil were again talking the other day that the global investors have started very openly talking about this market being a stock pickers market, which is typically a bottoms up investing market, where you look at stocks inherent strength or companies inherent strength, and you look at the merit of the company in the current market scenario, and you know, you pick up stocks. Luckily for us, MarketsMojo is a bottoms up stock picking platform, so nothing changes for us. But I think volatility will be continued. There are today also, if you see, there are more negative factors than positive factors. For us, the positive factor is India is very rightly poised. So when there is a little bit of a turnaround, the turnaround will be much faster where we are sitting. And I personally feel that if I were to put a milestone, that what is a milestone where all, you know, the excitement will be a much more wider spread excitement, I would say it is on the indication of the first cut on the interest rate, where I personally feel then market will take a strong, you know, U-turn at least. That's what I personally feel. But otherwise, till that time, I think it will be a managing of news, and within that news, trying to pick up, you know, the right companies to invest which look good at the same time. Sunil, sorry.
No, I perfectly agree with you, sir. Over to next question, please.
So this next question is from Mr. Ajit. Sunil sir, as you have said that now Sensex is trading at 23-24 times. Do you think PE expansion to happen?
No, sir. I don't think there is a scope for PE expansion. I think the growth in the earnings should be able to drive the market. So PE expansion looks a little difficult from this level.
So this next question is from Mr. Girish. Cochin Minerals, who has come back with a strong Q4 results, but why is it only listed on BSE and not on NSE? What's the long-term view on this stock?
Girish, sir, I don't have any idea why it's listed only on BSE, not on NSE. And sir, look at the score of the company. I have not looked at the numbers, so would not be able to comment anything on that. Please look at the score of the company and take a call on that company. I think it's a relatively small size company, and hence no view on that.
This next question is from Mr. Seth. Why packaging companies market cap is very less but have huge profits like Uflex and Jinda Poly?
See, these are basically a commodity business. So, you know, and they are always not a price checker. You know, they are always price checker. They are not a price. They don't decide they cannot dictate the price because they are supplying to some of the big players. So they will never command the kind of a price to earning that one would actually imagine. Again, you know, whether it's a player A or player B, almost everyone has a very similar kind of a product to offer, a technology to offer. And hence that's the reason we see them are relatively small size companies. That's the only thing. You know, it's like, if you remember, so historically, if you look at it, packaging as an industry never commanded the respect they used to command. Never. In fact, I distinctly recollect, and I had a very big debate many years back about the SL property, one of the fund manager, which was also into packaging of a lamitive for the toothpaste and for the pharmaceutical product and so on and so forth. And he was saying that this is a novel technology, why it should not command premium and so on and so forth. And I said, ultimately, it's the packaging. Ultimately, your business will come from couple of players, and they are going to dictate because if they don't buy, where will you go? And where will you sell your product? So the buyer knows very well that we are dependent on them, and they'll try to squeeze as much as possible every penny from you because they know that. And eventually, we all know what happened to the SL packaging, which is called now EPL Limited. So I think something similar. So there is nothing called unique about this business. So they will always be, in fact, they have never been a wealth creator. So they always a spurt in between. But otherwise, from a business point of view, and even if you look at the return on equity, they've always been a little struggling. That's another problem. And people do make a statement, I don't know, so I don't know. So I'm just giving an information. That's what market people say. That's not that I am saying so. There are also issues with the corporate governance, with some of the companies that with the packaging business, and that's where investors' confidence level is not so great high.
So this next question is from Mr. Hamza. So earlier in one of the webinar, you had shown FII buying trend versus Indian market. In that you proved that most of the time when FII increased, Indian market came down and vice versa. What is your view now on this?
I'm not very sure, sir, that I would have said that whenever they basically buy, market goes down. That could have happened in some of the cases. I don't think that's
No,
a thing.
I think where Sunil, you had shown the data. I remember, and I think that's the confusion. Where we had shown the data was there was no clear correlation coming in that if the FIs sell, then the market goes down, and if the FIs buy, then there is no clear correlation. It was the outcome of that was not that the FIs buys and the market goes down. I think it is the synchronization of, see what has happened is that the domestic retail investors share of, holding in companies has drastically gone up, as I think Sunil had shown the data in one of his webinars. So what we wanted to say is that there is no clear correlation that FIs buying is a guarantee for markets to go up or FIs selling is a guarantee for markets to go down. There was a time where the correlation was stronger when the dependence on the FIs was very high, but I think with the retail participation of in excess of, I think 40% coming in, the correlation has got broken out. So it doesn't mean that the FIs will buy and the markets will go down. I think it's a coherence of the domestic investors also coming in and participating in the rally, which will affect.
No, so I now recollect when Mohit said, what I stated at that time in 2008 when FI sold near about 50,000 crore, market crashed by almost 50%, am I right?
Yeah.
And this time they sold more than 2 lakh crore and market did not budge so much.
Yeah.
So what I had said at that time, despite FI selling so much, the market did not move down. In fact, it remained little stable. That's what I meant to say. But the conclusion was never that if the FI sell, market moves up. Sorry, that was never been the conclusion I wanted to convey there.
So this next question is from Mr. Rathiv. Which sectors are you bullish more in view of FII buying? What about HDFC Bank, which is most likely FII and it is a Mojo stock?
So, Rathiv ji, I think within the banking space, if you look at some of the small finance banks have done extremely well as compared to some of the large caps. So that's where this one. But as a sector, I believe we continue to believe IT should do very well despite heavy selling by the FIIs. Reason is very simple. I think a lot of negatives are already there in the price, and eventually the demand for the IT services will come back, whether we like it or not. So that's one we believe. Capital goods and the engineering, we strongly believe should do extremely well. And in fact, I was listening yesterday, or not yesterday, but last couple of days, some fund manager has been saying on the TV channel, the way FMCG companies PE have expanded in last 10 to 12 years, something similar can happen to the complete capital goods and the manufacturing sector. I would not be surprised if that happens to the capital, because they've not really done well since 11 crisis of 2007, 2008. So, and if you look at our Mojo stock list also, we do have some of the good, exciting companies coming from the capital goods and engineering. In fact, one of the companies that we are holding in our Infinity also has done extremely well from that particular segment. And another one sector which we believe could be a little dark horse could be the pharma, because we believe that again the valuations become very, very attractive there. The US generic prices have started, which used to fall, have really stabilized, and the growth in the Indian market continue to remain robust. They are growing in double digits, so that makes us believe that pharma could be another an outlier in going forward.
So that's it with the Q&A session, sir.
Well, thanks a lot. Wish you all a very happy weekend ahead. As I said, markets up 1.3% in the week, no clear sign. We should, I was talking to another investor today where I said that there's only two things that we need to learn in the market. Be patient and have the discipline. That's the only two things, not stock picking, not anything else, but sooner or later market will play out in the flavor of good quality stocks, which is what we've been propagating for now almost 8 years. And from the investor side, the only two expectations that we have is be patient and have the discipline. With that note, wish you all a happy weekend ahead and good night.
Thanks a lot everyone for attending today's event. Don't miss out tomorrow's webinar at 7 p.m. where product manager Jason D'Souza will cover all the basics you need while investing, from researching a stock in depth to selecting Mojo stocks. We will shortly send the invites for the same. Thank you and have a great weekend.